You're probably wondering what the situation in Europe means for you in the United States, of course, the world's biggest economy. It means a lot. Let's bring in Jim Awad. He is the managing director of Zephyr Management. And Jim, looking at Europe and these countries in crisis right now, it is not just about Greece. What is the impact if we see Greece implement this bailout package and the market believes it?
Well, in that case, you'll avoid a double dip in the United States, and we will continue to grow.
The question is, how much are we going to grow? So jobs in the United States, what's the ripple effect here on unemployment?
Well, on the margin, we'll create jobs probably a little bit more than we've been creating them since the economy has gained a little bit of momentum. So you would gradually bring down unemployment over the next year from 9% to something like 8.5%.
And then the question becomes, what does this growth do to your investments? Not just stocks, also bonds, et cetera. When people are looking at where their money is right now, given that scenario in Europe, what do you advise?
Well, you probably want to avoid Europe since they'll be in a mild recession due to all the austerity packages. The United States will continue to grow, but you want to own the most conservative big companies with exposure to the growth economies, which are the United States and the emerging markets. So you'd want to own the S&P type stocks that dominate their markets, that have dividends. You would want to sell small cap stocks, risky investments like junk bonds. And in addition to category killer U.S. corporations, you'd want to own some growth companies in the emerging markets.
A big question has been, how are corporations that are truly global, how are they going to fare given this scenario in Europe, really what you're calling the best case scenario right now? Corporations, are we going to see growth, or is the weakness in Europe going to knock off their earnings?
Well, the growth in the United States and the emerging markets will more than offset the decline in earnings from Europe. So you're probably talking about 5–8% type of earnings growth for the large U.S. corporations.
What would you say the likelihood of this scenario is, that Greece implements the bailout, that the market believes it, and then we do have to pay attention to what happens across Europe, but what's the likelihood of this now?
By a little bit, it's the most probable scenario.
All right, Jim, thank you.
Pleasure.